Hey guys, this is Cold Water FX from Phantom Trading, and today I'm going to be running you guys through the euro dollar short that I took during New York today. So to start off, let's look at market structure. We're on the daily chart here, and as you can see, we're pretty bearish, especially in the last 5 or 6 days. Obviously we've broken structure here, so we'll mark that out on the daily. Broke structure to the downside there. Even to a degree we could say that this was a break of structure. Also I should probably mention we're doing market mapping structure too. That's typically how I look at things. So I'm looking for body closures below wicks. So these are our wick lows, and then here are our candle closures below that. So we had our breaks of structure there. Now we can, actually before we move on, let's quickly look at the other side of it too. Kind of look at it from both ways, because if you guys traded euro dollar today, you'll know that there was also a long setup. So and actually I think even yesterday there was kind of a long off of this that a few guys played out as well. So here's a daily order block that we can also mark. Just be aware of it. I'm going to move it off to the side for now, and let's move to the 4 hour. So here's the 4 hour. And before we continue looking at structure, what I'm going to mark out next is, again, just the higher time frame structure that I'm really like playing this off of. There's a reason we're bearish, and to me the reason is not only structure but also this sweep of liquidity, this being a bullish trap, a bull trap, where the banks or financial institutions are tricking retail traders or other banks, however way you want to look at it, into thinking that price is going to continue in this bullish fashion up. But really what happens is price comes up, taps into another order block over here, sweeps all of this liquidity that's been built. So you're also tricking people who are just trading support and resistance, right? They get swept, that's our trap, and now we want to trade away from that trap. So we're a little bit deeper down now, and again there is that sort of bullish order block we got to be aware of, which we got a reaction off of yesterday, as I mentioned before. But overall, still like very bearish. My bias is bearish for euro dollar, so we're gonna play it as such. And this doesn't directly translate into obviously intraday, but it does give me a very strong bias to play off of, because there are longs obviously in any intraday session, whether it's New York or London. There's long, short, anything can happen, right? Within like an intraday perspective. So you got to keep that in mind. But again, if we trade with the trend, then more often than not, the higher time frame trend, we can catch something that's maybe more likely going to run. And again, we have momentum on our side. So it just makes sense to take trades that are with structure and with this higher time frame liquidity. So again, I'll mark this out so that we can keep aware of it. But really this is like daily 4 hours. So it's just something to keep in mind. We kind of have those all over. We also have a trap here if you want to look at it. We kind of have structural liquidity here. I'll just mark that out. Now again, this isn't super relevant to our trade, but it is important that we understand what's going on. It's not just structure. We have to pay attention to liquidity too. So moving back to the 4 hour, again we have another breaker structure here, so we'll mark that out. Just mark it as 4 hour boss. Right, so there's our breaker structure. And what causes that breaker structure? There's this last bullish pressure before our breaker structure down. So this is a really interesting area that we want to pay attention to. Now I find more often than not that 4 hour order blocks tend to be pretty reliable. So let's mark that out. What I'm going to do is I'm just going to mark the last buy before the sell. So our last bullish order block before the selling pressure down here. And the next thing we're going to look at is liquidity. Now, it's probably harder for some of you new guys and girls who aren't familiar with how to recognize liquidity on a higher time frame chart. But we have liquidity here. It's almost similar to this, where we have again, structural liquidity. And essentially you just think of it as a place where retail traders again would be leaving their stop losses. And again, maybe it's even those banks in some sense, right? Whether it's a hedge fund or something and they're trading it manually, there are people that have their stop losses here too, that work at banks. It's not limited to retail traders. So we have that. We also have this liquidity here, which will be a lot more clear on the lower time frame. So I'll move on to that next, but let's just quickly mark this as the 4 hour. That's our 4 hour. The other thing that I like to do, especially with these higher time frame order blocks, is mark out the equilibrium. And you're going to see why this is very important later on once I break it down further. So that's our 4 hour. Let's go to the 1 hour, 60-minute chart. You'll notice here, there's kind of like a hollow candle. This is my inside bar. I'm using an inside bar indicator. I think a lot of you guys are probably familiar with that because there's a few of us on the team that use it. All that is the bar doesn't break the high or low within this time frame, within this hour candle, right? So it's an inside bar. You can see here what I mean, right? Here's our high, here's our low. And again, same thing. I mean, you can even mark this out too, right? And mark out the equilibrium. You can see that it's almost in the premium, especially if we're looking for shorts. We want to obviously look in the premium if we're looking for longs in the discount. But within this, even if we set the EQ to that, and you kind of wait for the 50% mitigation to happen and look for an intraday trade to play off of that. Some of you guys recall, if you've been following some of the stuff I posted yesterday, I was mentioning in the euro dollar analysis chat that, you know, we're anticipating, or at least I was anticipating, some sort of reaction off of this 4 hour order block. This doesn't mean that it was guaranteed to happen, and obviously later on it broke up above it, but we did get a reaction, an intraday reaction that we could have played off of, and I'll show you the two trades that you potentially could have taken. I really only took one because I only felt comfortable taking the one, but you know, if you want to be aggressive or maybe you're more advanced, then you can take that other trade too. So again, let's look at liquidity. Obviously we have our breaker structure. Again, I kind of want to pay attention more to higher time frame breaks of structure. So 4 hour in this case. If we start looking at 1 hour structure, that's where things can get convoluted. I know personally I get confused sometimes if we're looking at every little break of structure. And that can kind of throw people off, I think. So I think it's best to just focus on higher time frame structure and liquidity wherever we see it. So again, we have equal highs here. We had like a slight sweep, but you know, same thing. We're still anticipating that banks, retail traders, whatever, are leaving their stop losses here, right? And even better, this liquidity is building right below our 1 hour / 4 hour point of interest, our order blocks, right? So if we look at this on the 1 hour, London was obviously pretty bullish. I believe there was a trade here. I wasn't up for London, so I didn't take that. But again, if we look at this, there's more liquidity that's been built, and this is even more clear on the 15-minute chart. So take a look at that. There's a few ways you can look at it. Obviously, there's equal highs here sitting below the order block, and then you also have this trend line liquidity that's sitting here too. So same thing. People are probably trailing their stops if they're in a short. Maybe they, you know, took a short from here, thinking that this is a resistance zone or resistance level, and they're just covering their short position, right? But again, that liquidity is there being built by some sort of financial institution that eventually is going to sweep it and mitigate their position short here. So let's play price forward a little bit. You can see here price pushes up quite aggressively. Again, not sure. I think there was a long here as well. Didn't take that. I was really just focused on taking the shorts today. Not to say I was overly biased, but you know, that's what I was looking for. That's the highest probability thing that, or highest probability trade that I was looking for at the end of the day. So saw this, we popped up, and if we go to the 5-minute, we'll play price forward a little bit more, and we can see that at this point we actually tap into the equilibrium of the 4 hour. We don't quite tap the 1 hour one yet, but really what's most important to me anyways is the 4 hour being tapped. Now I know a lot of you are probably going to do something that I did a lot at the start, and that's looking for lower time frame order blocks within a higher time frame order block. And you know, there's nothing wrong with that, but sometimes it can be very hard to pick and choose the correct one. And you'll see what I'm saying here when we kind of go into this with more detail. When I was trading this live, I wasn't in any rush to get in. What I really wanted was a confirmation entry. If you wanted to take it as a risk entry, you could have, but you're looking at a huge stop loss if you're just taking it off of the equilibrium of the 4 hour or even the 1 hour, right? It's relatively big, right? I mean, 4 pips is not bad, but if we're talking about the 4 hour, it's 7.5 pips or more actually. Looks like it's almost 10 pips, especially if you give it some sort of a buffer too. So again, I waited for a confirmation entry. If you're gonna try and look on the 1 minute to try and pick, whether it's decisional or extreme, you're either gonna miss a lot of trades or you're gonna take some losses. And I've made that mistake a lot. So that's just my little warning to you guys if you're gonna try to do it that way. Wait till you're more experienced. Take the confirmation entries. You're not missing out on anything. There's setups like this every day that happen. So let's see. We'll play price forward a little bit more. Still in the 5 minute. I'm gonna drop down to the 1 minute now. I'm gonna show you exactly where I took this trade. So there's a couple things that happen. Let me move over this equilibrium tool a little bit so you can see it. Obviously, we mitigated the 4 hour equilibrium to 50%. We tapped into the premium zone of this 4 hour supply zone, if you want to call it that. And obviously, we want to short it up in this area. So it's not to say that price couldn't come up higher. Again, if you want to look on the 1 minute and try and take an extreme, just expect to either miss the trade a few times or take a lot of losses, because again, it happens. So back to this, what I was looking at when price was playing here is, first of all, I noticed that price tapped into this wick. You can either look at it as the wick, or if you want, you can mark it as the last bullish candle before the little sell off here. So I'll mark it as that. Price tapped into that. Obviously, we sweep liquidity leading up to that on the 1 minute. Same thing with the 5 minute, I think, too, if you want to look at it like that. This one's a little bit more clear. You have a bit of liquidity that built here. Then again, on the 1 minute, we had trendline liquidity that was swept. So there's a few forms of liquidity that got swept. And then I noticed here we built some liquidity again on the 1 minute, tapped into that 1 minute wick slash order block. We had a very slight break of structure here, right? If you want to call it that. Obviously, we have a bearish candle here. So if I draw this as a diagram, I can illustrate it a little bit better. We kind of had something like this, right? This would be our wick. Kind of built a little bit of liquidity here. Came down, broke structure. So that told me there was kind of a momentum shift occurring after tapping the equilibrium of the 4 hour. Then we saw this. I'll play price forward a little bit here. Just do it manually this way because it doesn't seem to be working. And you can see this huge bearish candle kind of come up. So play it forward a little bit more. And this is honestly where I started paying a little bit more attention to it. I saw this really nice candle formed here. Again, I marked the equilibrium of it because I want to try and minimize the size of my stop loss. Again, the side effect of that is sometimes you're going to miss trades. You could also take the whole trade. There's nothing wrong with that. You're just sacrificing a little bit of profitability. So that's one way you could have taken it, but personally I took it this way and I gave it a bit of a buffer. I believe I did a 1.6 pip stop like that. I gave it just a tick of buffer. I didn't even really cover the high. You could have if you wanted to be more safe, but in theory, this low should be, or this high should be protected. So again, to recap, momentum shift, 1 minute break of structure, we'll mark break the structure down. And remember, higher time frame, we're bearish, right? On the 4 hour, the daily, everything. So a lot of things are in alignment here. Not to say it's going to continue, which it didn't, but it gave us a pretty nice run. And it was a pretty profitable trade too, as you'll see in a second. So next thing I noticed, as price played forward, we're going to go kind of slower here. Sorry, I know I'm dragging on a little bit, but I just want to make sure that some of the newer members that have just joined are able to understand this. So then we had liquidity to target that formed here. That was another nice thing. And obviously I marked this out, but if price had done something like this, I don't think I'd necessarily take it. What I'm looking for, again, as I mentioned in that diagram I posted yesterday, is that pre mitigation liquidity. So that's what I'm looking for here, right? Obviously, it's a confirmation entry. We had like some sort of liquidity. We tapped into something. But more important than anything is this liquidity in the center for me. So if you want to call this your initiation of price downward, you can. Doesn't really break structure for me, but the breaker structure happened here, right? So that's enough for me as a sub breaker structure for me to think this is gonna get pushed to the downside, especially again because we tapped into the 4-hour equilibrium and 1-hour equilibrium. So a couple nice mitigations. So now we start building a little bit of liquidity here, right? And I believe we build one more leg of liquidity before we actually tap into where our resting limit order is. So I'll just move it over to the side a little bit, or to the left, so you can see. And actually, yeah, so this really was the only liquidity that was built. And I remember sweating a little bit as I got tapped in here. I kind of had to step away from the monitor, and rather than like setting this break even right away, because I could have the first time. Sometimes I'll do that in an aggressive trade. I just let it ride pretty much. What I was really looking for, as you'll see in the diagram that I post later or attached to this video, I was waiting for this low to break, and I actually had an auto break even trigger here set with magic keys. So once this tapped or broke below, then I had my stop loss set to break even to kind of cover my risk. Now I know a lot of you are going to be wondering, isn't there liquidity up here? Probably asking yourself that. There definitely is, and that's likely why we got swept later on in the day. So it's not to say that we should ignore liquidity like this, but given the structure and price action that we were given, I still thought this was a high probability trade, and it was worth taking the trade anyways, despite the fact that there was liquidity here. So it's good to keep that in mind and know that liquidity can be built for later to be swept. It doesn't always have to get swept right away. So again, that liquidity is there. We'll mark it, and obviously we're in our trade. This is where things started running a little bit. I got break even. We'll mark that here. There's my stop loss, and then price just started melting. And at this point, obviously we want to look at some sort of targets. Really, you should be looking at your targets before you ever enter a trade. But let me kind of run you through what I was looking at here. There's a couple places that I wanted to look at. Let's hop back on the 15-minute for that. First of all, let's look at the origin of this push up. I believe this is the CPI news event that happened on the US dollar. As you can see, it kind of pushed up very aggressively. And this was like the bare minimum target that I was looking at. Again, I had price or my order set to break even, so that was my expectation that obviously knowing that we're in higher time frame bearish order flow and structure, we're trading against a higher time frame trap, bull trap. I actually expected that it was going to break down even lower. So I had a couple of targets that I was really looking at, one being equilibrium here, and I had one a little bit higher up, I believe, or maybe it was down here. I think it was here. I have it on my original journal and stuff, so again, I'll mark that out when I post it, because I will do a written version of this as well, just so that it's accessible to anybody. So at minimum, we don't need to be greedy or whatever. I mean, that's a pretty nice trade, 20R. So what I ended up doing is I let price play. I'll let price play forward. What I ended up doing was kind of observing it and deciding that no point in holding more than I need to. I'm gonna take profits, especially when we have like a huge impulsive move like this. Eventually, price is gonna pull back, right? So what I ended up doing was taking 80% off in and around this area. So I think somewhere around 18R, I took 80% off, and I mentioned that in the team trade as well. Gave a little update there, and I left the remaining 20% just to run in anticipation that we'd break these lows and stuff and continue with our bearish structure on the 4-hour. Now, what ended up happening, as you'll see here, is we actually got a long hedge opportunity, and Dan was actually nice enough to point this out to me on just over chat, Seafood Dan, and he was saying, we should take a look at this long, like, you know, not a bad idea, but I'm pretty confident this is gonna push down lower, so I'm not gonna take it. And what ended up happening was kind of tapped into it. Now, if you had taken the long here and kind of covered the low, give it some buffer, then that was your long hedge. And honestly, that would have been a good play. But you know, we don't always know that that's gonna work. And I mean, as good as it is, there's definitely an opportunity there to pull some profit out of it and kind of mitigate the risk from this. Obviously, we're losing whatever money we had on the table here with the remaining, you know, position size. In my case, the remaining 20%, as price kind of pushed back up and popped into my stop loss, which was set at break even. So this would have been a beautiful long hedge to take. But I don't think I'd necessarily take this long if I wasn't in the short, even though it did work out. So that's something that I try to live by when I trade is, you know, just because a trade works out doesn't mean you should have taken it. There has to be a rhyme and reason behind it. And like that's super important for me. Otherwise, I feel like you're kind of trading blindly. So that's a really nice long. I think you would have been able to pull, yeah, almost 10R out of it. So all in all, price ended up pushing up higher later in the day, taking my final position size out, the final 20% out at break even. So I believe what I closed out was about 14.2R on this trade, which is not too shabby. And I really only took one trade the entire day. I was also looking at a scale in here, but you know, this is a little bit more advanced. For those of you that are new, I wouldn't really suggest this, just because it's, again, this is very aggressive. This is an aggressive way to trade. So if we look at I believe it was the 2 minute, we have like an order block here. I'll just quickly run you guys through it. Now the problem with this trade, and the other reason I actually didn't even take it, because I didn't feel comfortable taking it, is we didn't really have much liquidity. Like, this is very subtle liquidity, even on the 2 minute. If we look at the 1 minute, remember, like, obviously a 2 minute order block is 2 1 minute candles, right? So we can kind of mark it like that. We have some liquidity here, but we're talking about the 1 minute here, so it's not the most reliable thing in the world. So if you felt super aggressive, maybe if you were in my trade and you're a more advanced trader than me, then you'd feel comfortable taking something like this, where you're just taking the 2 minute equilibrium like so, and you really just got to scale in, right? Because again, we're confident that because we tapped into the equilibrium of the 4 hour, 1 hour with higher time frame structure, that price is going to push down, and yeah, it's another way to squeeze more profit out of this move. That'd be another 12R. But anyway, I'm not advocating taking this. Again, I didn't even take it myself because I did not feel comfortable taking it. But I know there's some of you out there who are in the community that are even better traders than me, and you'd feel comfortable taking it, and power to you. And yeah, that's pretty much it. That's the short for EURUSD. Thanks for watching, guys.